Hi, this is Aptamer here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Saturday, the 31st of May. Starting with the FTSE 100, which is basically in this 100-point range between 8,700 and 8,800. End of day close through 8,800. We could be heading up to 9,000 by the end of June. Ideally, no weakness back below really now the 86.50 level. We might have to overshoot on the downside, but 86.50. RSI at 63, so tipped in favour of a move to the upside, backed by rising 50 and 200-day moving averages. Moving along to the DAX, and here you can see that similar situation where near-term support at the end of the week towards 23,900. We're looking for the top of that rising trend channel from the end of March last year, currently heading as high as 24,700, and we're looking for that by the end of June, by the end of next month, as a minimum. On the downside, hoping that 23,500 the worst. We'll see whatever happens, even if there is a rug pull. There was already a rug pull on the 23rd. Moving on to the Dow, which perhaps at the moment is the most interesting of the indices in the sense that we're trying to see whether this market can recover the tariff hit that it took. The main good news is that we're finding support at the floor of that rising trend channel, which has been in place since this time last year. I suppose the channel more accurately drawn, as I'm trying to do now, around the 42,000 level, but whatever the level there, 42,000 or so, and with an RSI 50 rebound, looks as though we will head higher, breaking 42,800 and heading towards 44,000 perhaps by the end of next month. The other positive at the moment is the way that both the 50 and 200-day lines are rising. That suggests that we're going into a golden cross, which I suppose would be for some time by the end of next month. Worst case at the moment, we've got to test that 50-day line, 41,000. Ideally, we stay above recent intraday support, around 41,800. Moving on to Bitcoin, where the Bitcoin Treasury Brigade may have had a little peak in the sense that we've had a bull trap through 109, the old January resistance, looking for support to come in above 100,000. Worst case is that it's going to come in at the 50-day line there at 98,000. Anything worse than that, and we would start getting a bit squeamish. We still have that golden cross aftermath, and presumably that's what gave us the record high, but now looking for support. Moving on to gold, and here the month was somewhat disappointing, but at least we've ended the month on a reasonable high, or a reasonable note rather. Rising trend channel there from March. Floor of the channel currently looks to be around 32.50. Above that, we're looking for a break of that April resistance line, 33.60, and then hoping that maybe by the end of next month we head up to 3,800, although that might be pushing it. Might have to leave that for back in July. The other point to note is the way that not only have we found support above a rising 50-day line, which is what we had before the record high up to 3,500, but also we've had an RSI 50 rebound, similar to the RSI rebound that we had before the record high. So let's see if gold delivers the goods. Moving on to the stocks, where we're rather spoilt for choice, which is always good, but here we've got Altona to start, which is obviously helped by the backdrop of China's rare earth blockade. Here we're rapidly approaching the target here. We had around 2.4 pence. In fact, we can now upgrade that to the next level up, which looks to be the upper parallel of that rising trend channel base from July last year, heading for 3.8 pence, hopefully as soon as the end of next month. The close for the shares above the old 2 pence resistance, post-2024 resistance. A very good look indeed, as is the way that we've had an RSI 50, extended RSI 50 rebound, and also we've got the 50 and 200-day lines rising for a golden cross, which should hopefully be delivered in the next couple of weeks. Obviously, the run-up to a golden cross tends to be the strongest part of the cycle. Moving on to a stock which I haven't looked at for a while, which is Alba, and here the first signs that we're turning around with the very strong end of week close above a rising 50-day line there at 0.02. We already had the strong candle on Thursday, opening at the low, closing at the high, so that should be enough to take the shares up and up towards 0.041. Maybe as soon as the end of next month. Might have to give it a bit longer, but initially at least the 200-day line at 0.028 should be a done deal, given that we managed to hit that even back in April, when the chart was arguably and the picture was arguably rather weaker. On to a favourite of mine, just because it's actually behaving itself, which is Aurrigo. So backed by some very strong, a strong update. I think they had the deal with Swissport, but you can look that up. Here we've got the 50 and 200 day lines rising to a golden cross. We've hit our initial target there, 86 pence, and above that looking for up to 135 by the end of June. I think after the rug pull from the target there, from 86 back down to the 60 area, one would have thought that the weak hands would be out. We also had an unfilled gap to the upside that we had on the 21st, which is also powering the candles. You can see most of the candles opening at the low, closing at the high, or similar, which is we did actually 3 days in a row. So this looks very strong indeed. On to Aptamer, which has had a deal apparently with Unilever, and here what's interesting is we've got the 50 and 200 day lines rising at the end of the week, slightly flat I suppose, but still up on the day with a gap to the upside, and that leaves us looking for the top of that broadening triangle, 0.51 by the end of June, while we're above the 50 and 200 day lines, 0.3 pence. On to Coinsilium, which has had yet another fundraise, I think 1.5 the other week and 2.5 million this week at 6 pence, and the shares remaining above the placing prices on both occasions. We also hit our target line there at 8.6 pence, but we overshot a bit, but we hit it. And the current situation is that while we're above the previous target there, 5.5, looking for a retest of 10 pence, maybe by the end of next month. On to Cizzle, where I believe there's been some intelligent buying over the course of the past week. Here we've got the 50 and 200 day lines rising for a golden cross. Lots of stocks doing that at the moment, which is eerily good, I suppose you could say. 2.8 pence the minimum there on the upside, the top of that broadening triangle, and probably looking for much more than that once we get through that area. That area up to 3 pence has been the sticking point for the shares for nearly 2 years. There's not really anything above the chart, but nothing really there in terms of resistance until we get to 4 or 4.5 pence. So maybe we get to that by the end of next month. Maybe put a reminder line in there for future reference. Moving on to another situation which is looking, well, say explosive, but pretty good, especially given the historical backdrop here. We've got Coral, and looks like a wide rising trend channel base, top of the channel there at 16 pence, which we're looking for by the end of next month after the latest solid break, on second time lucky, of the 200 day line, 7.5 pence. Ideally we stay on the right side of 8 pence ahead of a move to 16 by the end of June. On to defence holdings, which sounding very high-powered indeed at the moment. We had a massive key reversal to the upside on Friday, up 32% as well, and hitting, or nearly hitting, our second target there at 0.72. We already did that the first time, and above 0.72, looking for up to 1.1 pence by the end of next month. Ideally now we stay on the right side of the old initial, it was the third target actually, 0.48. So above 0.48, looking eventually for nearly 1.1 pence by the end of June. Very good to see that First Class Metals has shaken off all the defamatory comments and all the other rubbish that's been thrown at it over the last month or two, rising vertically over the second half of the week and hitting the 2.8 pence target that was previously set. Yes, I saw somebody on X actually acknowledge that, which is unusual because nobody really acknowledges any of the good stuff here. But here, above 2.8 pence on an end of day close basis, if we can get that early next week, looking for up to 4 pence by the end of next month. So it looks as though First Class is back in business. Moving along to a stock going the other way, which is extremely disappointing and surprising as well. Here we've got Hvivo. It was the star of the show until about November. And here you can see that shares have sort of gapped down in a horrific way. What is interesting, though, and there is a first sign of it, is the way that maybe Friday's move with the low at 6 3/4 was a bit of an overshoot to the downside. We want to see whether we can get an end-of-day close back above Friday's high at 9 1/4, which might suggest or confirm that the shares have overshot to the downside. It looks a little bit vicious on that at the moment. Moving on to stock which doesn't get much airtime anyway, but the chart too good to resist, really, of Kooth. The reason for saying that is that we've had a sideways shuffle above a rising 50-day line near the low, and what's also interesting is that the rise that we've had is in perfect step fashion, so up, sideways, and then up again. That should mean that the 200-day line there at around the 196 level is a done deal, and minimum on the upside. Above that, looking for above £2, looking for up to £2.50 by the end of next month, although obviously difficult to work out exactly what might do that. Now, the stock which has come back from the dead, which is much appreciated, is Mast Energy, and here we had the first target there, 0.33, second target, which looked like pie in the sky, 0.57, and the third target, which was even more pie in the sky, 0.91, which was hit on Friday, went to 0.99, and basically looking to see what the next level might be once we close above the 0.9 zone. The potential target there is not only to fill the gap up to 1.04, which we narrowly missed on Friday, but actually get up as high as 1.6. One would have thought 1.04, filling that gap there from December 23 would be the minimum on the upside. 1.6 at the moment, seen as being the maximum. Ideally, we stay above recent support and stay above the 0.7 zone for that stock. On to the last two. First one is Oxford Biodynamics, where I suppose in a way the shares did what one would have thought they would do, i.e. give an impression that the 0.4 area was the support, take everyone out and get rid of the weak hands down to the low 30s, and then bam, right up again, and hitting that resistance line there from back in March, breaking it on an end of day close basis above the 50-day line at 0.42, let's call it, looking for up to 0.6 pence by the end of next month. And obviously you can see that candle there on Friday, opening the low, closing the high, very, very strong. We had one of those back a couple of weeks ago, and in fact the shares only just went below that, so it is a strong signal. And the other point to note is that we've got bullish divergence in the RSI window, so lower lows for May, but a higher RSI trace, so that is completing the set of positivity. Finishing off with the stock of the moment, or at least it was the other week, and that is Smarter Web. And what's interesting here is that as we were thinking, the 70 pence area became the support area, a slight nudge below it, but 70 pence on that on the 27th, the low towards that zone, and above 70 pence we're looking for potential resumption to the upside, maybe another go at £1 on the basis that Friday was a beautiful hammer candle, cork and water rebound, so opening high, diving down to the 73 pence level and then closing on the high, so that is cork and water stuff. So hopefully we'll have some follow through there up to £1. Best case scenario target here up to £1.30, which is the red May resistance line projection. If it gets up there by or sometime during June, I would be very, very happy with the charting on that situation. Whatever happens here, though, that while we're above that uptrend line around the 60 pence level, still in bull mode, buying on dips mode for the Smarter Web company. That's it from me today. More updates during the week.